This is a Forex blog for December 30th, 2010. Showing our currency meter here, you can see which currencies are super strong and which ones are weak. The dollar has a weekly and monthly trend that was down. Last night it was extremely weak and had brief periods of weakness today. You want to trade that against one of the pairs that's strong. Today, starting around 4, the euro is very strong. So from 4 to about 10, you could be looking at buying the euro dollar. Strong euro, weak dollar. You can see 4 o'clock right here. This had just broken above the previous day's high, and it continued on up for another 70 pips. That's how you use the currency meter. Another one that was super strong today was the New Zealand, and so you buy the super strong New Zealand versus the weak dollar, and look at the chart. Obviously it had some trouble. It broke through the fib level last night. Once fib levels get broken, they tend to act as support. If they get broken to the downside, they tend to act as resistance. So as long as it's above this fib level, and you can see clearly on the bottom of the chart the daily, weekly, monthly trends up, you want to look for buys on pullbacks. Buy this pullback here. When it finally broke out over the high of the previous breakout of the previous day's high, you can see it shot up another 40 pips. I'm just going to go through each currency now, showing the various trading systems and tools in action. The euro dollar has a daily trend that was very strong after yesterday's explosive move up. The weekly trend's slightly up, the monthly trend's down. And starting the day off, it's going kind of sideways. You really want to be cautious of trading in very sideways choppy action. Look for signs of momentum on the bottom. This probably would not have been the one you wanted to trade until the dollar got really weak. But as long as it keeps making higher highs and doesn't make lower lows, you can get into these trades and kind of just keep raising your stop up. On dull days like this, for this particular pair, draw your fibs on there, and you probably want to exit the trade right here because there wasn't that much momentum. The fib level did act as a major resistance area, and because the market went up today without that much strength, you might have looked to do some counter trend trades. You might have made 20 pips on this trade. You might have got into a trade here with a loss, and then you shorted here and made 40 pips. Counter trend buy signal, opposite of the trend, is a good place to get out with a profit here. Pound dollar, the weekly monthly trend's down. It went up yesterday with a lot of momentum, and then you can see the momentum kind of died. We had a narrow range breakout here that you might have taken, and you would have got stopped out of this with about a 10 pip loss. Anytime you see a breakout of a narrow range pattern fail, it tends to lead to a counter trend move, which sometimes are as violent and severe down as this one is. You can see the weekly and monthly trend was down, and so the breakout here was less likely to work. And so once you saw that and it broke down underneath here, you might have went short. Notice the previous month's low right here, major support level. A great place to get out of that trade. And I would have waited for signs that it wasn't going up. Went back to this fib level, which was support, is now resistance. And once it breaks right here, this is a great place to get in. And you can see the market just exploded down right to our trading zone level, almost to the pip. Extreme weakness, which means you can usually look for shorts on pullbacks. You might have got into a trade right here that failed, got into a trade right here, and you might have made 40 pips on that. Notice this nice explosive move up right here. There isn't that much momentum compared to the previous weakness, and on a tick chart you probably would have got into this trade somewhere around 54.50, and that trade just collapsed 75 pips. Weakness tends to continue, especially when the weekly monthly trends in that same direction. Dollar Swiss, extreme weakness. This currency was down many days in a row, so in addition to looking for sells today, you want to look for counter trend buy signals. This sideways range breakdown, sideways rectangle breakdown, was a great place to go in, and then it came down. It's underneath a lower containment band, hit the monthly pivot level here. We have a fib level that I projected as the likely low of the day, and it was. So you would have got out of your trade here. I wouldn't have bought right here because of the extreme weakness, and you might have even shorted this next little pullback. But once it pulled back down to the support area without that much weakness, it's a decent place to get in and buy. It didn't really take off, but you might have made 5 to 10 pips a few times on this buy down here. Dollar CAD, the trend is clearly down. Daily, weekly, monthly trend is underneath the hourly, but when it breaks above the narrow range pattern here, you go long with your stop right here, so you might have lost a few pips there. And again, a failed breakout tends to lead to a reversal, especially when the weekly monthly trend's down. So you would have taken your loss here and gone short and expected the low here to get broken, which it did slightly. You can jump the gun and get into that trade, and it pulled back barely even 9 pips, 10 pips. So you probably got out of this trade at break even. And at that point, you really want to wait and see which direction it's going to go. This one's been down so many days in a row that you might have bought this breakout here. And again, it was a pretty dull day. After getting to a few trades that really don't work out, I tend to avoid those currencies. Notice there's no extreme strength or weakness, and you're better off using our currency meter and focusing on the ones that are really moving. This one is very strong, daily, weekly, monthly trends up. So looking for pullbacks here at the hourly is a good place to get in. But when you see it's going up without that much momentum and it's hitting the previous month's high, which is a major resistance area, you can continue looking for buys. But once the market breaks down underneath the low of the day and you have a narrow range pattern right here, it's very likely to reverse. And you had extreme momentum here, so you're looking for a pullback to get into that trade. You might have had a small break even or loss there. You might have gone into a trade short on here that you might have broke even on or made 5 pips or lost 5 or 6 pips. And then once it broke down underneath this sideways consolidation rectangle pattern right here, you can see it pulled down about 20 pips. Because this one's so strong on a weekly monthly trend, when it falls without that much momentum, you really want to get out near a support level. Here's a weekly R1 level, and it's just going sideways there. You might want to either exit half your trade or scale your stops down. New Zealand dollar last night broke above the projected fib level. Anytime a fib level is broken, it tends to act as either support resistance. So when it comes down to it and can't get underneath this fib level here, you have a narrow range pattern. The daily, weekly, monthly trends up. You might have bought this breakout right here and lost a little bit and got in again. The market shoots up 30 pips. So you lose 5 or 6 or 10 pips, then you make 30. The market pulls back and it doesn't get back inside the previous range here. And so when it breaks out again, you can see the extreme strength on the way up. You get long again, and the market explodes up. This has incredible momentum, so you're looking to buy the next pullback. And you might have got into this trade, or you might have waited for the breakout of the sideways range. If you did get into the trade, you had a loss. Otherwise, because of the extreme strength, you're not necessarily looking to sell it because of the extreme strength and weekly monthly trend. You draw your fibs on here, and getting into this at the Elliott two-way fib pullback, you're pretty much in this trade just about a half an hour ago, and we're expecting possibly 7,700 as a good profit target. You're risking 10 pips to make a likely 20 on that Elliott two-way fib pullback trade. This one has the daily, weekly, monthly trend down, and it's hovering slightly above the hourly. Remember, above the hourly is more likely to go up. I probably would not have bought this one because it went up with almost no momentum and the longer term trend's down. But if you were aggressive and bought this 4 or 5 hour sideways range breakout, you might have used this as your profit target. The only trade I probably would have taken in this, given the fact that the weekly monthly trend was down, once it has extreme strength like this, you look to buy the pullback, and you might have made 5 or 10 pips, but the market pretty much went sideways. So the worst case scenario in that trade, you would have broken even. And if you see it go up again to the high here with less strength in this, something looking like this, you'll want to sell the double top with divergence later today because the longer term trend's down. That's a trade to look forward to. Great example of trading with a trend. Daily, weekly, monthly trends down. It came up and broke above the hourly. You might have gotten into that trade, but knowing the longer term trends down, you wouldn't have expected to make much. And once it comes back down underneath the hourly, that's a great place to trade on the short side because the longer term trend's extremely down. And this is a good support level here to get out. There wasn't that much momentum. When it pulls back to the hourly and can't get above it, another great place to go short. And it breaks through the low here and just collapses. You would have had your fibs on this swing right here as your likely profit target, and so you might have exited half your trade here, and it went right through the 1.618. It hit the 2.0 fib level almost to the pip. Great place to get out with a maximum profit on the second half. Because of the extreme weakness, you're also looking to sell the next move up. So it comes up, you go short right here, and you would have made 20 or 30 pips on there if you exited half, or if you came back into the low. Notice slightly lower low, kind of a double bottom with clear divergence here. It's underneath the lower containment band. Great place to get out of that trade. I wouldn't have bought down there, but if you did, it exploded up. Because it went above the hourly and because of the extreme strength, I probably wouldn't myself have shorted here. But aggressive, traders would have caught that nice move down. Australian yen was extremely choppy yesterday, so most of us probably wouldn't have even traded it today. The weekly trend's down, the monthly trend's slightly up, and it appears very choppy today too, so I'm just going to skip this one. This one has a weekly trend just slightly up, the monthly trend slightly weaker. You have a narrow range pattern right here, and it's above the hourly. You might have bought that breakout. Whether you got stopped out or not, actually this is only 10 pips, so you wouldn't have got stopped out here. But you had this fib level above you. So you typically don't want to buy breakouts right in front of a major likely sell area. You can see it hit it the first time and pulled back, and then it shot through it. But you don't know that's going to happen. So probably most of us wouldn't have even traded this pair. Dollar yen, the extreme weakness of this currency. You can't buy a breakout of a narrow range pattern if it's underneath the hourly. Only if it's above the hourly can you do that. So you don't take that trade. Comes up here with a counter trend sell signal right at the previous day's low. Great place to go short because of how weak it was and the intensity of the weakness last night. It only pulled back 10 or 15 pips. You would have got out of that because there's no weakness there. Because of the extreme weakness, I don't think I would have taken any trades on the long side until it broke this level right here. It broke back into the previous day's range, pulled back again. I might have went long right here, but notice the upper containment bands, great place to get out of the trade. Because of the extreme strength, you might have also bought this pullback, and you didn't make much on that trade, but you certainly didn't lose. Last but not least is the CAD yen. CAD yen's a great example. The longer term trend's down, the weekly, the monthly trend just slightly up. But this fib level down here is a very great support, and anytime a fib level doesn't get broken, you want to look for signs of strength. There's more momentum to the upside than downside. You might have bought this breakout back above the hourly right here, and it didn't really move up that much, about 25, 30 pips. It has a lot of momentum. This is our trend explosion system. You buy the next pullback down. And again, that trade didn't really work, mainly because the weekly trend's down and you don't want to trade against the weekly trend.